When we hear the word corporation, most of us imagine this massive industrial empire of the size of a nation, much more than we often imagine a small business. However, the truth is that corporations don't have to be big at all, and in fact, most of the corporations in the United States are not big. Corporations are legal entities on their own, and they can be running revenues from billions of dollars to just a few $1,000s, imposing certain legal and tax rules on the owners, also called shareholders. A corporation can be as large as Coca-Cola Inc. or as small as one person. But one fundamental legal characteristic of a corporation, no matter the size of it, and what I want you to take out of this, is that it's a separate legal form from his owners, and that the shareholders of the corporations are normally protected from personal liability for any business legal debts. In a corporation, the shareholders can come and go, and the business will continue to exist in spite of any changes in the corporation's ownership. I said normally protected from personal liability from business debts, legal debts. However, there can be some exceptions. For example, when corporate owners ignore corporate formalities and treat a corporation like an unincorporated business, like a partnership or sole proprietorship, a court of law may ignore the existence of a corporation and rule that the owners are personally liable for business debts and liabilities. So it's possible. So to avoid this from happening, it's important for the corporate owners not to allow the legal boundary between the corporation and its individual owners to get fuzzy. They have to be clear. As a corporate owner, you need to scrupulously respect the corporate formalities by holding shareholders and directors meetings, which need to be documented, by issuing stock certificates, if that's the case, and maintaining the corporate bank accounts strictly separate from personal funds. In this case, things cannot blend. Also, it's important to remember that having a limited personal liability, even in a corporation, it won't protect you from losing your investment that you initially made or you made along the way in your business. That's why insurance is very important to protect against catastrophes such as lawsuits, fires, theft, whatever it is. And we'll talk more about insurance in the following sections. However, please keep in mind that if you just can't pay your normal business bills and debts, insurance will not help you with that. Having a corporation will protect your personal assets, but not the business itself. To open a corporation, it's more complex than with other business structures. It takes time and more money, and normally an attorney will have to draw the articles of incorporation, which need to be filed, just like in the case of an LLC, with the Secretary of State Department where you live. The tax benefits of a corporation are numerous, and the corporate tax laws are complex, especially because the corporation, like I said, and I insist that you understand the difference, a corporation exists as a separate legal entity from its owners. That's why in the case of a corporation, you will more likely have a CPA or another tax professional actually prepare your tax returns. And we will talk more about tax benefits and different types of deductions that you may get in the tax section of our course. For now, please, if you're planning on starting this type of an entity for your coaching business, make sure that you consult both a lawyer or an accountant to determine what kind of corporation and what kind of taxation will be best for your needs. Now, I'm fully aware that each country and even each state and city in the United States can have different laws. Therefore, what applies in one place cannot always apply everywhere else. So it's not like one size fits all. That's why you need to do your homework before you embark on the corporate journey. However, as you may see in the tax section, it may be a road that it's worth taking.